Welcome back, everyone. I had a call with somebody the other day, and I ended up kind of talking them out of going to some place, actually relocating at all, and talking them out of going to some place that they would optimize their tax. And I want to talk today about something that I think sometimes people can miss the forest for the trees, and it goes back to a bit of advice that I've given people for quite a few years when they come to me, because I think some people can kind of put the cart before the horse, so to speak, and they can lose sight of like, what are you really after in the big picture? I think it can be dangerous, although it's sometimes very beneficial to pursue short-term goals, of course, and have short-term thinking. Thinking longer term, thinking bigger picture can be much more constructive for you than going and making some short-term change that might benefit you in, this year, but 2 years, 3 years, 5 years from now wasn't actually as good. So we're going to dive into that subject, and I'm going to explain kind of the logic and how it applies to you, and we will see from there. As always, if you would like any advice or help with these subjects of international living, international structuring, strategy, and implementation, please reach out to me. We can help you with residencies, citizenships, bank accounts, forming companies, etc. And please hit the subscribe button, hit the notification bell, check out our other videos. Really appreciate your support, and let's get into it. Okay. So here's the bottom line. People contact me a lot, and obviously I talk lots on this channel about saving on tax, right? And I think there's a pragmatic reason for doing that. I think there is even an ideological case for doing that. That being said, why do you want to save on tax? The answer, I think, for most people, some people might just ideologically not believe in supporting a government, and that's fair, that's cool. But I think for most people, it's so they will have more money. Right? And it's your tax optimization strategy is part of your wealth building strategy, which is designed to facilitate greater freedom. And basically, I think of money as a lever for your values, right? Basically, it is a lever that, if utilized properly, can help to direct yourself, your community, the world around you towards what it is that you believe in and value, as opposed to what somebody else believes in and values, right? So that all makes sense. But if you think about it from that standpoint, then you have to start to realize, well, hang on a minute, the goal here isn't actually to pay, say, zero tax. The goal is to keep as much of my money that I'm making as possible. And there's two sides to that, right? The one is the overall expenses, and I sometimes talk to people about this, where I would say, okay, you have what I call effective tax, which is, it's not really tax, but it's expenses you incur in the process of saving tax, which need to be accounted for in your overall ROI. So let me give you an example. Let's say you're paying $500,000 a year in tax, and you can lower that to $100,000 a year, right? So you're like, okay, great, I just saved myself $400,000 a year. So my tax rate is, let's just say that before it was, I don't know, pick some random number. It doesn't really matter. Let's say that it was 25% and you just lowered it to 5%, right? All right, fair enough. But then if it costs you an extra $50,000 a year in order to achieve that goal, then technically that extra $50,000 is not tax, but it's like effective tax, right? It's like, okay, well, the real number that you care about is, hey, I'm keeping an extra $350,000 a year, right? That's the example. Well, the same works in the other side, which is on the upside of it, right? And here is where this conversation came in, where this person I was talking to was like, okay, great, they were going to save some tax. Great, that's wonderful. Good for them this year, etc. But in the process, the question was, what would happen to their income? Because if I end up going into a situation where I pay less tax, but as a result I have less income, then the loss in income actually could end up being greater than the tax savings. Right? So I didn't really win in that scenario, unless I was somehow moving to some place that I really wanted to be, in which case, of course, that's personal values, like great, fantastic. So I often think about, okay, you've got like your costs of living, you've got your costs of operating your business, etc. These are one part of the equation, and it's really useful. There's something called the general anti-avoidance rule. I did a video on it previously, where you talk about what's called the business purpose test and the economic substance test, and so basically it's like, okay, is there a business purpose for what you're doing? And is there actually like a financial implication outside of the tax savings in what it is that you're doing? And there's lots to be said for that, right? There's lots to be said for saying, okay, great, like by relocating my business, I'm not just saving tax. That's a nice benefit, but I'm also maybe hiring people at lower cost. I'm getting access to a better quality labor market. I'm accessing better infrastructure, lower payment processing rates, or better banking, or et cetera, et cetera, et cetera, right? So those are all business purposes. That's great. And that might help to further your business. On the flip side, the opposite could be true, right? Let's just use as an example, say somebody was going to relocate from the US to Singapore, right? And there's two scenarios you could look at here. One is you could say, well, it turns out that although your tax rate is lower, your cost of living is higher, and so you didn't end up in a good position. If you're relocating your business, it's a smaller talent pool, it's harder to hire people, and you may end up having to pay more for them, depending on where you are in the US. On the flip side, if you're a software engineer in Seattle, there's a good chance that the wages in Singapore are 1/3 of what they are working at one of the major tech companies in Seattle, right? And so as a result, you might relocate and you might say, hey, listen, I'm saving tax. The top tax bracket in the US is 37%. There's no state tax in Washington, so don't have to worry about that. But the tax rate is going to be like 22%, I believe it is, in Singapore. So okay, you have a lower tax rate, but if you're earning 1/3 as much income, you're actually keeping less, right? So I think it's really useful to think, like, what are your goals overall, and what can you do to further your goals? And part of that is the tax planning part, but part of it is the proximity to opportunities, the market value of things, the costs associated, etc. So anyway, hope that's helpful. I hope that's kind of like a useful way of thinking. If you'd like some assistance with figuring out what should you do, how should you structure yourself, where should you go, etc., please reach out to me. You can book a call, calendly.com/Michael-Rosmer, and check out our websites, offshorecitizen.net, offshorecapitalist.com. Send us a message through there. If you haven't already, hit the subscribe button, give it a thumbs up if you like the video. If not, please tell me why in the comments, and I'm going to look forward to seeing you guys on the next video.